Welcome to the elevator pitch of Media and Games Invest. My name is Paul, CFO of MGI, and I will guide you today through the highlights of the company. Starting with MGI in a nutshell. So MGI is a leading European gaming and digital media powerhouse serving customers worldwide. And we're progressing a strong buy and build strategy in both segments combined with strong organic growth. We have done more than 35 M&A transactions since 2012, roughly 20 in the game space and more than 10 already on the media space. We have a market cap of more than 900 million euros and more than $1 billion US, and we are listed on the Frankfurt Stock Exchange and on Nasdaq First North Stockholm and have more than 900 employees worldwide. On the game segment, we focus on long recurring sustainable revenue streams and have more than 10 top MMOs in our portfolio, more than 5,000 casual games, and serve more than 100 million registered gamers worldwide. On the media segment, we mainly focus on long-term sustainable software as a service revenues and have delivered more than 166 billion ads in the last 12 months and served more than 5,000 advertisers worldwide. On the key revenue splits, we see that North America is now by far our biggest market with a revenue portion of 63%, followed by Europe with 24% and Asia with 7%. While the revenues by segment are split quite equal, 51% from the media side, 49% from the game side. And also on the revenue and EBITDA development, we see that we have been on a very strong profitable growth track in the last 6 years. So why do we combine media and games? It's a very clear cost, data, and revenue USP. On the left side, we see a gaming standalone company, which normally pays 15 cents per install and can generate €2 ad income per 1,000 ad views, which means you need 75 ad views to be break even with the user acquisition cost, while a media and games combined company pays 10 cents per user and can actually double the ad income to €4 per 1,000 ad views as the full margin stays in-house, which means you just have 25 ad views to be break even and you have a 200% higher efficiency. And that is really driving the profitability and growth of the company. Looking into the strategy of MGI, so we are progressing a very clear buy, integrate, build, and improve strategy. Buying means mainly buying inefficient companies which are too small, integrating them into our platform on the cost side, but also creating a lot of revenue synergies. And that is then the build and improve, really driving strong organic growth post-acquisition. On the games side, that's mainly adding new users to the games, but also internationalizing the games. While on the media side, it's actually also selling the products globally with our over more than 20 local sales offices. So how does a typical M&A transaction look like for MGI? We have two things we focus on. That's EBITDA negative cases where we want to earn back the purchase price within 24 months, means purchase price including transaction costs and burn rate, where we have historically been rather below 18 months. While on the EBITDA positive cases, and that's the shift which you see actually, we now with the access to equity and debt capital markets also can afford higher purchase prices with a total volume, and therefore also focusing more on EBITDA positive cases. And here we don't want to pay more than 6 times EV EBITDA. It means we can actually also pay 10 or 11 times if there's clear synergies, and we can bring that multiple down over time. We target companies of 5 to 40 million revenues and don't really want to go much higher, as we really want to stay away from the bidding processes, which we see in a lot of transactions with higher revenues. Looking now into the summary of the annual financial performance, and here we see that we have shown very strong profitable growth with and reached 193 million revenues on the last 12 months with a 45 million EBITDA, and also have shown a very strong organic growth of 36% in the second quarter of 2021 and reached a revenue CAGR of 78% since 2018. What we see here as well is that we saw a dip in the EBITDA margin in 2019. That's when we mainly entered the media business. But since then, we have also increased the EBITDA margin to 23% on a last 12 months basis. They expect actually to go up to 25 to 30% as we now scaling also the media business quite nicely and therefore going into higher EBITDA margins here as well. Going now into the operating cash flow and Capex development. And here we see on the left side that the operating cash flow has increased substantially to more than 33 million on a last 12 months basis, with a very strong underlying free cash flow of 26 million. And that's achieved because of a limited maintenance Capex of just 7 million in the last 12 months. And that is because we just focus on further development of our IP-owned games and don't do a full new game development from the scratch where we invest 5 to 50 million because we see that as too risky, and rather focus then on M&A transactions where we acquire companies with existing customer base and existing games. And here we have actually done also the KingsIsle acquisition in the first quarter of 2021, which then also led to a strong increase in expansion Capex, plus some new game licenses and new game IPs, which we have also acquired in the last 12 months. That brings us actually already to the end of the elevator pitch. What does MGI stands for? It's a low-risk business focus, so focusing on recurring steady revenue streams, MMO games, but also software as a service media revenues. Very strong organic growth that's achieved in the games by adding new users, new content, as well as launching new games via licenses. And on the media side, it's scaling existing and adding new demand and supply partners, while we also focus very strong on the synergies between both segments, and on top also adding further synergetic M&A. So we have done more than 35 M&A transactions and have a very well-filled pipeline. And what differentiates us also to other companies who do M&A is that we fully integrate the companies, which drives a much higher cost efficiency, but also a much higher strong organic growth in both segments. Thank you for listening in and stay tuned.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.